may be thinking about buying a home. Now, whether you are a first-time buyer or a seasoned veteran, you may have heard of the importance of having your financing in place. I'm constantly asked, what's the difference between a pre-qualification and a pre-approval? In today's video, I'm going to explain those differences, but more importantly, I'm going to share with you why one is superior to the other. So stay tuned. And if you like this video, please hit the like button below and share it with your friends. That way I can have more videos out and more information to those who find it most useful. So let's dive right on in. What is the difference between a pre-qualification versus a pre-approval? Now, a pre-qualification is really the first fundamental step that you're going to do in the mortgage process. It gives you a broad picture of basically where you would qualify in terms of how much money a lender is willing to give you. Basically, they will ask you how much money do you have as a down payment and roughly what is your income. And based on those two numbers, they will give you a range of likely where you will be in terms of how much money the lender is willing to advance. Now, a pre-qualification is just a starting point. If you're really a serious buyer, what you really want to do is you want to have a pre-approval in place. Now, a pre-approval is where the bank or the lender will give you in writing how much money they're willing to give you, what interest rate that money is going to be advanced to you, and for what period of time that pre-approval is valid for. Now, with those numbers, then you can more accurately look for a property within your budget, and that way you're not going to go look at a property, fall in love with it, only to find out you can't afford it. So what's involved in getting a pre-approval? So if you're looking to get a pre-approval, your first step is to contact the lender. And when you contact the lender, they're going to ask for a couple of pieces of information. One is they're going to want to know how much money do you have as a down payment? Is that money in cash or in investments? Is the money coming from the proceeds of sale of your current home? So that'll give them an idea as how much you're going to be putting down on the purchase. The next piece of information that they're going to be looking at is what's your income. So how much money do you make? And that would be your gross income. And then what they're going to look at is they're going to look at any debts that you have. So do you have car payments, student loans? And then based on your income and your debt payments, they're going to work out a calculation as to how much money the banks are willing to advance to you. Now, when they're looking at income, they're also going to be looking at things like, are you self-employed? Are you an employee of a company? Have you just started in your job, or is this a job that you've had for a long period of time? Or have you started a new job, but it's still in the same line of work? So what they want to see is consistency there. Are you on probation at your current job? So those are the kinds of things that they're going to look for in terms of proof of income from employment. Now, the next thing that they're going to look at is your credit. Do you have a good credit? And are you the type of person that pays your bills on time? Because obviously the lender is going to want their money paid in a timely manner as well. So based on those numbers, like I said, they will give you a written document, which is a mortgage pre-approval, saying that you are approved for X amount of money at this particular interest rate and for this period of time, which usually is around 90 days. Now, having a pre-approval provides you with a whole host of benefits when you're going out looking for your next job. So first of all, the pre-approval allows you to know your affordability. How much money is the bank going to be willing to give you? How much money do they think that you can afford on your monthly payments? Number two is it also allows you to lock in the interest rate. So they're going to lock the interest rates at the time of your application. This is really great because if interest rates should rise, then you're going to be protected as long as you buy within that period of time, and you're going to pay that interest rates. But now you may say, well, what happens if the interest rates drop? Well, you're protected there as well. If the interest rates do go down, the banks or the lenders will usually give you the new and lower interest rate. So it's a win-win for you either way. Now also, when you have the amount of money that they're willing to give you and the interest rate that they're willing to give you, now you can work out some calculations and see, if these payments are comfortable for you and your family. So that's where the affordability comes in to play as well. So maybe the banks are willing to give you a really high number and you work out those payments and you say, I really don't feel comfortable with those numbers. That's okay, because you don't have to buy to your maximum. You just know that the funds are there should you need them. So you may decide to go a little bit lower in price, work out those payments and say, you know what, these feel more comfortable for me. But you don't want to do it the other way. It's always good to have a higher amount of money that's being willing to be lent to you, rather than having not enough money and finding that home that you've fallen in love with. Now also, with a pre-approval, it allows you to show the seller of the home that you are a serious buyer. When an offer comes into a seller, they're always wondering, is this buyer really someone who can afford my house? And often they will ask yourself or your agent, has this buyer been pre-approved? And obviously you have to be forthright in your answer. So if you have been pre-approved, you can say, yep, I've been pre-approved with this financial institution. You don't have to tell them the actual amount that you've been pre-approved for, but that you have this pre-approval in place. And if they should ask for it, and if you're willing to show them that you are pre-approved for that number, then you've got that paperwork in hand as well. Now, when you show the buyer that you are pre-approved, or you tell them, yes, I am pre-approved for this price range, they're going to be much more serious in the negotiations with you, because they know that you can actually afford their house and they're not going to want to miss out on that opportunity. And lastly, having a pre-approval in place benefits you because you get all of the benefits that we've just outlined, and it's free, and there's absolutely no obligation. But it certainly does give you not only peace of mind in terms of the financial aspects of purchasing a home, but it also gives you that superb negotiating power at the table. That way, your realtor can really work in your best interest and get you the house at the best possible price. So that's really the difference between a pre-qualification and a pre-approval. Good luck on your house hunting. If you need any help, I'm here to serve. You can reach me direct, Evelyn Lopes at evelynlopes.com or at 905-965-5902. Thank you for tuning in. And again, don't forget to like and subscribe below. And if you would like to learn about more topics related to the buying and selling of real estate. Thanks so much for tuning in. Bye now.